Welcome to Trading Lounge and the Nifty 50, and with the Nifty 50 here today, I want to talk about the bearish side of this particular market. Now, I know that the move up through here can be counted in 5 waves here. So that means that the market can pull down to the 50-60% retracement level and then move up. And in fact, if we take this here, because we only made it to the 50% retracement level, it's possible that we can look at this market in terms of an A wave here, a B wave here, right onto this space here, and then a C wave coming in here, coming to the top of that particular structure here, rather like that. So we just need to be a little bit mindful of that. But at the same time here, one of the important things here is we don't want to miss a move that's going to drop down into this space here, of course, especially while we're at a level here at the 9,000, which makes it a really nice space to be here, to be either long here or short here. So that's what I want to talk about today. So let's go in and take a closer look. So if we look at the situation where we have wave C here of wave B here, just humor me for a while, and then we've got wave 1 coming down to here and wave 2 coming back into this space here, then we can look at this as wave 1 here, and right on this little top here, hasn't pulled back up to its 50 or 60% retracement level here either, but it has traced out a particular pattern here where we can have an ABC here for the A wave, the B wave, and the C wave here, and then this little move down through here seems to be impulsive. So if we see a drop through the 9,000, then we want to be on that, because what will be occurring here, if this is correct, and obviously that it's only if this plays out in this particular direction that is going to be useful, because if we've got wave 1 here and 2 here, then wave 1 and 2 here, that means we'll be in the third of the third. So that means that this market will move really quite quickly through here. So India's got a few concerns, not only on the border there with China now, but also, with its COVID. And also the other part of all of this as well is that we're looking at, if I can just bring the US markets into this for a moment here, we've been looking, might just even go to the daily chart here, but you can look at the US video. There may be one more little top in here, but the other point here is that if we count up orange wave 1, 2, 3, 4, and 5 here, we're very close to a top here. We may have the top in, or maybe one more tiny little high here, but either way, we're looking for a reaction from the 3,000, and the wave count is also suggesting that we can pull back to the 50-60% retracement level here. So if there's that, this will be fear orientated to a point, so that will come and affect other markets as well. So that could help the the Nifty move down lower from that point. So we just need to be I'm just looking at the driving factors here, but also too we want to have a look at this in terms of the wave count as well through here. So let's go into the 1 hour chart here, and this count could be totally wrong. So it's just that I don't, if it's going to occur, then we need to look at all sides. We just don't want to miss that. So we've got 1 and 2 here, and wave 1 here, an A and a B and a C here for wave A, and then wave B here, and then we've got 5 waves up here for wave C of 2 here. So in this particular instance here, if this is breached here, if the market pushes up through here, then it's not going to be the case. Well, not just yet, at least, anyway. So, but it does appear that we've got just cleaning that up, but it does appear that I can count 5 waves up here, and we'll look at that on the tick chart perhaps. And then this looks like impulsive here. This certainly looks like a corrective wave here. The other point here too is that we're expecting the US to make probably another little high, or the Asian markets, Australia, to make another little high, and then fold over. So, you know, this could be the right timing for this as well here. So this little move down through here is not in 5 waves yet, but can drop down to here and then have an ABC back up here and then move down from that point there. So in a nutshell, we want that 9,000 to be the resistance here. That's the important thing here. Okay, we want to be on the right side at the right time, and that means that that needs to be the resistance right on that 9,000. So this is the 15-minute chart here. With this, so we're looking from wave 1 here, an A wave here, a B wave here. We've got 5 waves up for a C wave to make wave A here. This could count as an A and a B and a C wave down through to here. And they could be counted in a couple of different ways actually. And then this here can be counted as wave 1 in here, wave 2 here, wave 3 to here, or wave 3 to here, and ABC for wave 4 to here, or we've got a B, C, D, E through here. But either way, we can see that it's a corrective pattern, a bullish corrective pattern. And then up here for wave 5 and wave C of 2 at that particular point here. So also what I think is interesting is that this move down through here looks rather impulsive down through here, and this move here is definitely corrective as an A and a B and a C wave here. It's not showing this as an impulse wave. It could keep developing as an impulse wave. It also, well, yeah, I mean, because that's corrective, we should see this come further down here, unless we're looking at some other more complicated correction across here. But if this is the case here, like I mentioned, you know, we really want to be on this on the short side here at 9,000. Now I want to talk about this level here for a moment, because when we're looking to go short here, so we get these spikes here, we don't want to be trapped in those spikes. So market comes down, normally has a bounce off here. In this case, it came to here and bounced way back up there, then came through here. This case here came down through here and didn't come back at all here. But normally, you know, if we look like this here, then it's not that we want to chase this breakout here. That's the dangerous point. What we want to do is we want to wait. Now the market could go to here, and then it could drop from that point. So it's that low there that gives us our first instance here. The second one here is that the market can move an A and a B and a C and go back above the level there, and then come down and have another little test in here like this here. So if, like in this case here, we could have had a short trade here and that didn't get triggered, so we could have even gone into the next little one here. We could have even gone into this one here as such, and we probably could have even gone into this one or this one, whatever. This one, I have to go in there to have a look at that again in there. And look, you may make a mistake, and it doesn't always work out, but it's a very sort of practical and safe way to move into a market without understanding the wave count, because what we're looking for is the market to come down. You know, it needs to migrate from being support to resistance here. So the other way, the little pictures that I normally use, if we use this here is the 9,000 across here, the market comes down, bounces off it, comes up, comes through here. We don't chase that. We just part of the setup. It's a breakout. This is refining the breakout further. The market can move up here in 3 waves and then come down, so we can look to get in over here. We can also, I should put a line in through here, so we can go short here as well on this and short here. You want to get in 2 or 3 times, you know, at the beginning of the trend. rather than chasing the market halfway through and all the rest of it. So this is where you really want to get in the market. The variation on this here is where it doesn't come back above the top here. It just comes through here, bounces back up to here, and finds it as resistance. That's always nice and clean and very tidy, and thank you very much. And then it gives you two chances to get in, build two positions in with a very tight stop above a really strong number that's already proved that all the orders are sitting there, holding it at that point. So you just keep the stop above that. Don't put the stop on whole numbers ever. Just always put it above there at 4 or something, 9,004 or 9,007 or 9,014 or 9,017 or something, 4 and 7 on the short side are good for that. So yeah, this is the pattern that we're looking for to short that 9,000. Now, I'm not saying that this is the case here, but there's a reasonable probability that it could occur, and all we are doing is just getting ready in advance for that move there. So that's what luck is, isn't it? Preparation and opportunity meeting, as they say. Just cleaning up here a little bit. We don't want to delete the text here. So okay, I think I've sort of covered what I wanted to cover here to make sure that we're in this at the right time, the right side at the right time. And look, if this high gets taken out here, then by all means, be long from that point, because I've made a mistake in some way or another. And this could be up for 1 and back for 2, up for 1 and back for 2, maybe up for 1. I don't know. It's still this one here. This is why I'm making this video, because this is in 3 waves here at this stage. So it could be an A and a B and a C here, but it would have to come down at least down to here. And taking that low out here, that's the one. That's the one that creates the negative structure at that point. So that's the confirmation, but we want to use this nice big fat juicy 9 here to build in on the short trade. You could go short from here too, but you'll need to leave the stop here above that wave 2 there, down for 1, back for 2. So you need to leave it above that there. Okay. Alrighty, thanks for tuning in. Cheers.